Tradesdaddy, market moves, pressure bills, still steady. They talk down, we rise up, eyes on gold, now all trust. Now all trust.
Okay, so technically today we'll be discussing the nature of candlesticks. This is where we have bulls and bears, or bullish and bearish candlesticks. So the nature of it, before we go to it, just do a quick recap. So bulls represents buys, meaning that the market is going up, or a candle that goes up, and then bears represents sells, meaning that the market is going down, or candlesticks that goes down. So that's how we get to identify bulls and bears, the difference between the two. And there will also be a color combination, obviously. So we will get into it a little bit later. So let's start with represent like looking at the physical anatomy of a candlestick. So we can classify this one as a bullish candlestick, but how will we exactly see that? So we will see it with its characteristics. Obviously, it has a low and it has a high, right? And then how can we, what is going to tell us, okay, this is a bullish candlestick. So it opens at the bottom and then it closes at the top. So with that being said, it means that when it opens, it might go down, but if it closes at the top, it means that that's a bullish candlestick. So even if it moves above where it opened, it means it's a bullish candlestick. So let's look at the different types of candles, bullish candlesticks. So we have this one, which has the body in the middle. It opened at the bottom, closed at the top. However, the body is in the middle. And then you find, hooray, we also have other wicks at the top, which shows the activity of the candlestick. So it means so it went down, but they pushed it back up and then they pushed it a little bit down. So now you have this one whereby the body is at the bottom and the body tried to push the market. So this, what it represents is that buyers tried to push the market up. However, they were not strong enough to keep the market up. So it went back down and closed just above the open. And then we have another one whereby the body is at the top, right? So it means so sellers tried pushing the market down, but they were not strong enough. So buyers pushed the market up to close it above the thing. And now with this specific one, it shows the activity of the market that bullies or bulls are in charge. So that is what it represents because it opened all the way at the bottom, pushed up and closed. So the body is a little bit bigger than the other bodies, the other three bodies that we just shared, which represent that here, this is what can tell you the bulls are in charge, right? So now we can, I hope that you understand that. Let's move to the bearish concept and understand what the anatomy of this candlestick. So we can see it has a body, then it has wicks. Wick, it will normally give you what we call this a low and a high, meaning that the highest point the market reached at that particular time frame, the highest point it reached and the lowest point. So now how can we really identify it? It opens at the top and then the market gets pushed down, closes at the bottom, or the market the candlestick closes below the open. That's how you get to identify it. So let's go to the nature of it. Now here we find one that's in the middle, a body that's in the middle, and then we also get a body that's at the bottom, meaning that the um buyers trying coming in, but sellers were like, nope, we are pushing it down. So the body or candlestick shows you the what really happened in the market. So that's how you should view candlesticks and each candlestick, right? So hence I say, Hore, it's you looking at the nature of the candlestick, how how it moved basically. So candlesticks represent how the it indicates the activity of buyers and sellers. Okay, so now we will move to the technical analysis as always, and we will start with the DXY. So we are not going to do much on it because it hasn't like yes, it violated a few lines and everything. So we'll just cancel that out, cancel that trend line out because it violated it. So yeah, so we have a clean or bullish structure telling us that the US index is still in control as much as we might be experiencing a little bit of a retracement, and it might happen that we might have a fail swing and then start moving to the downside. So if you go to the 4 hours side, that retracement has created like a lovely bearish movement, creating creating lower highs, lower lows, and now it's showing a double bottom. So yeah, we will just wait and see or what is actually happening currently. But to be honest, we see it like being a little bit bearish. So there's really nothing much to it. There's really nothing much to it. So as we go to a 1 hour time frame, what we are realizing is that it's currently ranging within the same range. So yeah, we'll just mark that high and the current low and see how it behaves. So it's either it will go up or down. Yeah. So let's go to gold. That's the main analysis that we will be working on. So we cancel out a few lines from yesterday that were violated. And what we are seeing on the 4 hour time frame is that it's still creating that bearish movement. And now we're expecting this is the end of a retracement or might just be the beginning of a higher low or beginning of an impulsive move. So, but it has to either break that psychological area or react to it. So that's what we are currently expecting. So yeah. So to as we look at the 1 hour, there's really nothing much to it, but we will mark the lows and highs just to wait for them to get triggered, and then we will sell from there on. So once if we don't end as well, yeah, there's an order block right there. That's something that one might have not realized, but there's an order block, meaning that we are expecting a reaction from that specific area for selling. So we can sell right there or just wait for other confirmations, right? So in order for us to have like a strong sell, we have to consider that the DXY needs to buy. But as for now, it's still consolidating and everything. So yeah, let's move on to the next. So with Nasdaq, we will just do the same thing. It we won't start analysis from scratch. We will just cancel out a few lines that were violated yesterday and leave the ones that haven't been violated. So what we see here is a good, yeah, like it's just consolidating as well, but moving to the downside. So we will mark those important zones and just wait to see what happens, right? Okay, so now I'm just going to do a quick trade journal and how I could have took my positions, right? So we will start with the DXY to see what really happened. So as you can see, the highs and the lows that we just marked have been violated, but that's a recent one after 6. So that's after us trading. So around 3 and 2 o'clock, we had a reaction along at the thingy important zones. But with gold, we see that reaction that we were expecting from that what you might call this, from that um order block that we mentioned. So we could have got like a sell which gave us like at least 100 pips, right? So that's what we could have got. So now with this, if we go to our smaller time frames, we will see that today's market was really lovely for us to trade because there we have like a smaller nyana uptrend creating our lower low. Then we have a head and shoulder pattern right at the order block, breaking the structure, and after breaking of structure, meaning that it violated a low that it previously created. So it was our recent lows. So after that breaking it, we had what you might call this. We had like a smaller Nyanagi test, and then we put our stop loss just above the that area, which we were risking for about like $5 and made $18 if I'm not mistaken. But we could have aimed for the previous lows right here. I think we could have done much better, but man, after all, it's all about like building capital. Going to Nasdaq, Nasdaq, it was a bad trade because it's like we caught a moving train. So yeah, I wouldn't really advise on Nasdaq like that.